I'm Roby Brock. Welcome to the program. Glad to have you with us. Right before Thanksgiving, we got a new look at how the state's economy was faring. And that's where I began my conversation with Mervin Jebaraj, economist and director of the Center for Business and Economic Research at the University of Arkansas Walton College of Business. Well, Mervin, we got a good number, 4.4% for state GDP growth in the second quarter. At the same time, there were some revisions to previous quarters going back a few years. I'm a little skittish to buy into the good news of 4.4% when there's been so much correction. Am I warranted in that?
Well, I think what you're seeing, the 4.4%, 10th fastest growth rate in the country among all the states, is really good news. And yes, you are right. There were a lot of revisions, and a lot of those revisions revised the growth rate down. So looking back from 2013 to 2017, we find that the Arkansas economy actually grew a little bit slower than we thought it grew. As a result of all those revisions, so that's not exactly great news. But what we've seen is at the end of 2017, the fourth quarter of 2017, the first quarter of 2018, and the second quarter of 2018, we saw some positive momentum here in the Arkansas economy. And I guess I'm less concerned about the revisions in this case because it also matches what we've seen going on in the overall U.S. economy. The U.S. economy's been performing really well in 2018, and so those numbers for the first quarter of 2018 and the second quarter of 2018 here in Arkansas, when we were at 4.4%, kind of go along with what we were seeing with national economic growth. What I would point out, though, is that one of the biggest drivers of that 4.4% economic growth in the second quarter here in Arkansas was the agricultural sector, which is a sector that tends to be fairly volatile. Some quarters there's a lot of positive momentum, and others there's negative momentum from that on our state's GDP. But in particular, in the second quarter is when you saw a lot of soybeans being exported to avoid the retaliatory tariffs from China. So it's possible that the second quarter GDP here in Arkansas got goosed a little as a result of all of that. And if that was why agriculture drove that 4.4% in the second quarter, we'll probably expect to see a much slower third and fourth quarter this year.
And where are we on tariffs? The president signaled he is not going to back down on Chinese tariffs, which would mean no immediate relief for Arkansas farmers or manufacturers. It could be good for the steel industry, though. What are we seeing in terms of the impact from the tariffs in the data that you're looking at?
So, tariffs, I think, have ended up becoming the big economic story in 2018 when it really should have been sort of the positive economic growth that should have come from the tax cuts and stimulus passed at the end of 2017. So unfortunately, if you look at some of our biggest trading partners, the state, Canada and Mexico, the two of our largest trading partners here in Arkansas and for the U.S. as well, we have a new NAFTA agreement. So that's good news. There's at least some long-term certainty about what trading relations and supply chains will look like between Canada, the United States, and Mexico going forward. But what hasn't happened yet is that the United States imposed steel and aluminum tariffs in Canada and Mexico. Those are still in effect. As a result, the retaliatory tariffs that Canada and Mexico imposed on the United States, Canada alone has imposed about $225 million worth of retaliatory tariffs just on Arkansas. All of those are still in effect. So even if they sign this new NAFTA agreement, all of those steel and aluminum tariffs and retaliatory tariffs on Arkansas products are still in effect, and that is affecting Arkansas businesses across different sectors. So all of that's still in effect, even with the new NAFTA agreement, and that's something that hopefully when the leaders of these three countries meet on the sidelines of the G20 summit this weekend, they'll be able to hash out some agreement on that, so we'll lose the retaliatory tariffs that are affecting Arkansas businesses. Similar story with the European Union. Steel and aluminum tariffs are still in effect for them, as well as their retaliatory tariffs on our products as well, so that's something that we need to watch out for. At least we've stopped talking about new tariffs when it comes to talking about the European Union. The big bad news on the horizon is obviously no progress on this front of trade talks with China. We currently impose a 10% tariff on $200-something billion worth of Chinese imports. They've imposed retaliatory tariffs on a variety of different products. The one that's hardest hit Arkansas is obviously soybean exports to China. But what we haven't seen is any progress in those trade talks, so it looks very likely that come January 1st, that 10% tariff on $200 billion worth of goods is going to go up to 25%. There's talk of a new round of tariffs, an additional $200 billion or so worth of Chinese imports. All of this is going to engender more retaliation from China. But I think this is starting to affect consumers' pocketbooks as well. When you talk about 10% tariff on $200 billion worth of Chinese imports, consumer prices are going up across the board in all of these different products. So far, manufacturers are picking up some of this and consumers are paying the rest of it. Depending on what sector you're looking at, some of them are half and half, and others where consumers are picking up the entire tab of the increase. But when those tariffs go to 25% on January 1st, unless there is some miraculous progress in the trade talks between the United States and China, you'll see consumers really feel the pinch of those tariffs imposed on $200 billion worth of Chinese imports. And I think, looking at all these tariffs and trade wars between all of these different countries, global economic growth, outlooks for global economic growth have been reduced. People are expecting slower economic growth across the globe over the next few years, which has meant that there's now possibly a glut of oil out on the market, and that's pushed oil prices down. So that's the only silver lining in all of this, is that oil prices are down because maybe there's an economic downturn in the global economy in the next few years.
Lastly, you and I have spoken before about the disparity in the economy in different regions of Arkansas. Just to recap for folks tuning in, about 25 counties are adding population, about 50 counties losing population. 7 counties count for more than 50% of all Arkansas job growth, and that would mean that about 68 counties account for less than half of the job growth, kind of an unsustainable model there. What do you think state economic leaders and lawmakers should be doing to alter that equation, if there's anything they can do? I mean, we do have a legislative session coming up.
There's a laundry list of things that the state could do to affect these statistics in Arkansas, and especially help regions of Arkansas that are not thriving as much as the others. One that I would point out repeatedly is, you could make a lot of investment in a lot of different sectors, but one thing Arkansas needs to invest in is its workforce in 2 different tracks, especially one for the percentage of population that does not have a college degree. Arkansas tends to be one of the lowest in the country when you think about the number of adults in the state that have at least a bachelor's degree. Even places like Northwest Arkansas that are relatively better off have lower educational attainment in higher education than the nation as a whole. So this is an area that the state needs to continue to invest in 4- and 2-year colleges across the state. We have a lot of colleges and universities here in the state. Make sure that finances are not a barrier for qualified students to get into these universities and colleges to get their 4- and 2-year degrees. If they can get in, make sure that they're not taking too many loans or unable to get in because of the cost of college. So that's an important avenue that the state needs to improve. We can't attract the kinds of businesses that we want to attract. We can't grow the kinds of businesses that we want to grow in Arkansas if we don't have the educated workforce to go with the jobs for the new economy. The other side of that is also vocational training, workforce training for people currently in the workforce, to make sure that their skills are up to date, to make sure that we have a good supply of skilled trade workers coming through the pipeline for students that don't go the college route. So make sure that part of the education pipeline is filled in as well. So that's 2 parts. All of these will obviously require some longer-term investments. In the short term, obviously the state needs to attract more people with skills, both college degrees and skilled labor, to move to the state. And the biggest population group that you can attract to move to the state are probably the millennials, and they're attracted to states that tend to be more welcoming. And by that I mean, the state legislature should probably avoid passing negative laws determining who goes to what bathroom or locker room, and those types of issues. Avoid those divisive issues and make Arkansas a truly welcoming place for millennials to move to, those that have skills and skilled trades, as well as college degrees, so that they can work in different parts of our state.